QuickBooks Pro Plus Desktop 2022 OneNote presentation. Create invoices using billable time. Let's get into it with Intuit QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction, 8322, create invoices using billable time tab. Also take a look at the immersive reader tool, topic introductions in the text area too, with the same name, same number, but with transcripts. Transcripts that could be translated into multiple languages, neither listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're looking at the screenshot of the home page to start off with. In prior presentations, we entered the time into the system, imagining a system where we're going to have basically employees doing work. In our case, they're going to be doing guitar lessons, but you might think about this in the event or in the situation of a CPA firm or a law firm where you got the staff that needs to have their billable time in the system that we're then going to use to bill out, creating invoices on possibly a weekly, bi-weekly, or monthly basis in order to bill out to the customers. So if we think about the actual transactions, then it's going to be a straightforward type of transaction. When we record the invoice, we're simply going to be increasing the accounts receivable, the other side going to some kind of revenue account. The new component here is that we're pulling this information in from the timesheet data, which can link as we pull it into the invoice, because we're going to imagine that our staff members, our employees, are putting in the customers that they worked for, in this case, the guitar lessons that they gave to customer 1, customer 2, and then their billable time, which we're just going to assign a billable rate for that person, charging their hours, then their time that they spent, and they clicked it off as a billable, so that'll pull into the invoice. So when I create the invoice for customer 1, I'm paraphrasing here, it says, hey, we've got this billable time. Do you want us to pull that in? And we're going to say, yes, we do. And here's the 2 billable times for that first customer. We pull that in, and there is our invoice populating for us. The invoice increase and then the accounts receivable by the 300. The other side then going to sales or revenue. Not really sales. I think we put it to another revenue account, service revenue, driven by the item. And of course, the subledger for the receivables will be going up for this particular customer, customer number 1. AR going up, other side going to the sales or the service revenue and income type of account on down below. The subledger also increasing for the customer. Let's do it again. Customer number 2. We're going to put in customer number 2, and QuickBooks, I'm paraphrasing here, says, hey, we've got this billable thing. Do you want us to add it to your invoice? We're like, yeah, we do. So now customer 2, 2 items pulled in from the Adam guitar lessons that we pulled in from the timesheets that Adam put into place. This then increasing because it's an invoice, the $300 once again to the accounts receivable, the other side going to the service revenue, and the subledger for customer number 2 will be increased. Let's do it again. Customer number 3. It says, hey, we've got this billable time. Do you want us to add it? We're like, yeah, we do. Adding those billable hours. This one for customer 3, for Erica's time, charging out at the 150, given the rate that we have set up for Erica, that's a 460 total. This increases the accounts receivable, other side going to service revenue, and the subledger for customer number 3 increasing as well. Customer number 4, I think this was the last one. We do it again. It says, hey, paraphrasing here, we've got billable time. Do you want us to add that? We're going to say, yeah, we do. Let's bill customer 4 out. We've got the 115 for the amount that we're billing for the 460. Once again, increase in accounts receivable as well as service revenue and the sub account. So now we've got the accounts receivable has been increased. The other side then going to the service revenue for the time that we have charged. We've got customer 1, 3, 2, or 4, 3, 2, and 1 here on the subledger. If we were to add up the total for the subledger, it would tie out then to the accounts receivable. Here's the customer payment. When we make the customer payment, of course, we're back to the same kind of process where we then have the invoice that we populated that we can check off receiving the payment. This would increase undeposited funds, decrease the accounts receivable going down, undeposited funds going up, and then the customer balance, as we can see here, once the payment would have been received, means that we invoiced and then payment happened and it goes back down to 0. So then we have this deposits. We could make those 2 deposits over here, which would just be decreasing the undeposited funds and putting it into the actual checking account. We're going to pick both those items up, assuming that this is how it's going to be seen on the actual bank statement. So now the checking account's gone up and the undeposited funds have gone down. If we think about this just with journal entries, then pretty straightforward journal entries. The only tricky piece is remembering that we got to track the actual time. So if we have staff that's working like in a law firm or CPA firm, we need to set up the time, which we could do within QuickBooks, or you could just do it with an Excel worksheet or something like that and just tell us who you did the work for, what you actually did, and then the time that you spent on it, and we'll charge out basically on your billable rate, or we'll charge out basically on what it is that you did, and we will do that on a weekly, bi-weekly, or monthly basis typically. So the journal entry would be straightforward. Accounts receivable going up, the service revenue then going up when we bill these items out, accounts receivable going up, service revenue then going up, and then the AR, if we look at the subledger, would be going up by those amounts that we charged out for the 4 items. So it went from 20,956 up by 300, then by 300, then by 460 for the 4 invoices to the 22,476. And then the service revenue was at the 6,980, went up by 300, 460 to the 8,500. The subledger then down here is going to be going up by the 300 here, I believe here, for customer 1, customer 2, customer 3, and customer 4 that we have now billed out for. If we add up all the information for the subledgers, that adds up to the 22,476, which ties out to what's on the general ledger. Then we said that we got a payment from one of them, this first one, increasing undeposited funds and decreasing the accounts receivable, just like we would expect. So undeposited funds now is going up from 100 plus the 300 to 400. Accounts receivable is impacted. Let's see that on the GLs. So here's undeposited funds was at 100, up by 300 to 400. And then the accounts receivable was at the 22, actually I haven't included 22, it's not here. We're missing the last one here. So we're missing that last transaction, apologize, but it should be then going down to the accounts receivable for that last transaction, the 300 decreasing by that 300, bringing it back down. And then if I was to take a look at the subledger here, the accounts receivable for customer 1, obviously it went up and then it went back down, making the total back to 0. If I add all these up, we're at the 22,176, which doesn't match here because I didn't have that last transaction, but it does match up here, 22,176. So disregard, I'm just going to delete delete that altogether. And then if we transfer to the checking account is going to go up, undeposited funds going down. So now it's been going into the checking account, undeposited funds back to 0. Subledgers here, checking account went from 103,602 up by 400 to 104,2. And then the undeposited funds was at 400, goes down by 400 back to 0.